Hi guys, good afternoon and welcome to the CNBC TV18 Saturday special. We were just hearing from the Finance Minister where she was taking a host of questions on, a lot of the announcements that came out of the budget, the entire Adani Group story that we've seen play out, and several other issues including Vodafone Idea. But we have lots more lined up for you, so let's bring you some of the top stories that we have been tracking. And we'll start off with the earnings space. The State Bank of India reported a strong show in Q3. They've actually recorded the highest ever quarterly profit led by strong NII growth as well as other income growth that we saw in this quarter. In fact, the net interest margin has also come in at a 29-quarter high. And in more, the cost-to-income ratio has come in at a 23-quarter low of 49.2%. This is versus the 52.1% that we saw last quarter. A few more highlights that we want to put on the table. The asset quality, so the gross and the net NPA ratio is the best that we've seen in 29 quarters. So it's come in at 3.14% and 0.77% respectively. On the other side, what doesn't really work for the bank is that deposit growth has grown very little this time around. So it's just around 0.6% higher sequentially. The foreign loan book has also declined, while the CASA ratio has come in at a 22-quarter low. So those are some important highlights from the State Bank of India's Q3 earnings. In fact, my colleagues Ritu Singh and Abhishek Kothari caught up with SBI Chairman Mr. Dinesh Kumar Khara and began by asking about the quarter gone by, as well as, of course, the bank's exposure to the Adani Group, which is really top of mind. So let's listen in to that conversation.
When it comes to our exposure to the group, we have financed assets which are having adequate cash generation, and they are in a position to meet their liabilities in the past also. And there is enough cushion available, not that it is something which they have already availed it to the brim. So that's not the kind of situation. And when it comes to the execution of their projects also, we have seen that they have been ahead of the time for execution of their project. So these are the kind of reasons why we are saying that they will be in a position to honor their commitment. And also, when we carry out the assessment of any of the project, we do carry out the sensitivity. And since I mentioned that all these projects are the one where there is adequate cash generation already happening, so we don't see any reason that there will be any kind of a drop in the cash generation which is happening from these projects, and that is the reason why we are quite comfortable in terms of our debt exposure. I also mentioned that we have not extended any loan against any of the shares of any of the companies, so that is not there on our portfolio. And the other part is that the non-fund based exposure which we have extended, this is all for the normal course of business, and these are the LCs and the bank guarantees. Bank guarantees are performance bank guarantees or the financial bank guarantees, but they are in the normal course of business. So our exposure is actually purely related to the economic activity, and their economic activity is going on pretty well. So we don't have any challenge in terms of their ability to honor their commitments.
So point taken, you're not worried about that 27,000 crores of exposure to Adani Group because it's against cash generating assets. But if I were to ask you, this is your outstanding loans. Are there any other loans in the pipeline? Would you consider, extending further loans to the company at this point of time if they were to approach you?
No, see, the point is that all such proposals are evaluated on its own merit. And there is always a requirement of upfronting the equity, and only when the equity is upfronted, then the debt is released. So there is a process which is always involved, and that ensures that there is adequate commitment from the promoter. So we don't have any such issue relating to those projects also, which are where the disbursement is in pipeline. So as and when that disbursement will happen, there has to be an equity component coming upfront, and then only the debt will be released.
You are seeing improvement in your net interest margin. If I take a look at your credit deposit ratio, that's also below the system level, around 74%. So by when can you continue to see improvement in your net interest margin? And also deposit growth has been very minimal on a quarter-on-quarter. So last time when we spoke, you did say that you'll use your investment book to fund the loan growth. So till when can you see a momentum on net interest margin continue to see an expansion without hurting your, deposit growth or anything?
See, the point is that as far as NIM expansion is concerned, almost about 74% of our book is linked to EBLR or MCLR. And even in the MCLR also, about 3 months and 6 months would be about 80% type, and about 10% would be 1 month MCLR link. So MCLR link also means that as and when there is a revision in MCLR, we'll have a chance to have a higher earning from that particular loan account. So I think with that in mind, if at all there is going to be an increase in the deposit rates, it will also show up in the MCLR. So that is something which will happen, and the transmission is almost instantaneous in that kind of a situation. So that is, I think it will not have an impact on the NIM. It will only lead to the new normal for the loan and the deposit rates.
If I were to turn to your asset quality, now net NPs have fallen below 1%. Your gross NPs have also improved sequentially. What could you tell us in terms of closing the financial year? What would the credit cost look like? Are you expecting the slippage run rate to continue? In this quarter, we saw about 3,000 odd crores. What will we expect in this current quarter?
See, I expect that the trend should be almost on the same lines as we have seen it in the last 2 quarters. So hopefully for this quarter, we should have almost similar trend, which should show up towards March end of financial year 23.
All right, that is the management of the State Bank of India talking about a whole host of issues and how they really see the outlook going forward for the company. But on that note, we're going to wind down on this special. Thanks for tuning in. And remember, you can catch all the news in action right here on CNBC-TV18.